From 2006 to 2023, Cambrian treated 17 million cubic meters of some of the world's most difficult wastewaters, produced over 5 gigawatt-hour of energy, leveraging a NASA-derived technology through an unconventional business model, filed 16 patents, and raised $42 million of growth equity. Quite the typical path of a water tech poster child until November 2023, when this press release got published. Pennybacker acquired Cambrian for an undisclosed amount, all while committing to a further $200 million growth equity investment. A real estate and infrastructure private equity acquiring an almost too cool and too ahead of its time water tech hardware company for an undisclosed amount and with not many further announcements. Quite a bizarre move, but one that clearly could be a game changer. I patiently scratched the surface for the past 8 months, going back to my 2021 interviews with Cambrian's CEO and founder, reaching out to Pennybacker but also to countless market players and investors, and I'm finally ready to share what factors led to Cambrian's bizarre exit, why there's a bittersweet taste to this surprising event, what this exit actually means for future water techs, but also why that's great news for early-stage water investors. Yet before all of that, I need to tell you about American Water and why a company like Cambrian, which sounds like the complete opposite of the US's largest water and wastewater regulated utility, is actually very closely related. Cambrian, first called Intact Labs, then Cambrian Innovation, then Cambrian, started in 2006 on the back of a dream. On one hand, the US produces 140 million cubic meters of wastewater every day and uses 3% of its electricity to treat it. On the other, there are bacteria capable of generating direct electric current while treating wastewater.
Let's see what happens when you mix the two.
Mixing the two leads to Cambrian's dream, packing some Shewonella oneidensis bacteria in a reactor, letting them feed on wastewater to transform pollution into electricity, and leveraging that energy to feed electromethanogens microbes that will electrolyze water, merge it with carbon dioxide, and produce methane.
That's easy, right?
What we're discussing here is called a microbial electrolysis cell. It is potentially net energy positive, all the while producing a carbon-neutral biogas. If it sounds high-tech, it's probably because it is. Matthew Silver, Cambrian's founder, holds an MIT Master's in Astronautical Engineering and a PhD in Engineering Systems. The technology's first deployment was on a NASA grant, and even though NASA wasn't sure it could make real use of methane in outer space, they funded the commercial kickoff of the technology on Earth. On the back of that MIT, NASA, and then World Economic Forum endorsements, Cambrian developed its first commercial product, the EcoVolt reactor. This containerized anaerobic wastewater treatment system, built on the shoulders of the microbial electrolysis cell design, was catered to the most difficult wastewaters to treat, like the sugary and highly carbonized effluents of food and beverage, wineries and brewery installations. The link to American Water, I'm coming to that. Because if it's not your first time here, you probably know that oftentimes the hardest in water tech endeavors is not to build the tech, it's to get it adopted by the market. In the specific case of a company like Cambrian, a business-as-usual status quo type of situation sees their ideal customer, let's say a brewery, get their water from the grid, use it, and discharge it to the sewer while also powering their operations from the energy grid. That works, and at the usual cost of water and energy, it's nowhere near a burden you like to alleviate. So why take the risk of putting a high-tech NASA container somewhere in your basement, train a crew to run it, and then take on the responsibility for its smooth operation so that it doesn't discharge polluted stuff because some electricity-generating bacteria is upset? Now, to Cambrian's credit, even under those high constraints, they managed to sell over 20 systems by leveraging some tailwinds like accounting for carbon impact and strengthening discharge rules. But the path to impact hardly added up. Long sales cycles, uphill battles, high R&D and production costs, all of that would have put Cambrian's future in jeopardy if they hadn't done one huge strategic pivot. At the end of 2015, they launched a Water Energy Purchase Agreement. The idea is brilliantly simple. As an industrial, you would be able to one-to-one replace your water and wastewater utility and also a bit of your energy utility through Cambrian.
How do they do that?
Well, the company would come to site, finance, install, operate and maintain its EcoVolt reactor, both bolt its blue cycle membrane bioreactor on the back, and sell you at market cost or below water fit for purpose and decarbonized energy. That's where my analogy with American Water kicks in. What American Water and its peers have been doing for centuries at large-scale infrastructure level, Cambrian now started to do the same, but at small-scale industrial site level. There's a name for that approach. It's called distributed treatments. From an investor perspective, American Water is a reasonable dad's darling. Let's say you started investing some money for your children's education in 2009, and you've decided to play it neutral and buy a words ETF. Well, good for you. By today, you've made a 679% return on that money. Now, you could have played it slightly better and go for the S&P Global Water Index. You'd be at 780% ROI. But the best of the best would have been to buy only American Water and boast a nice 806% profit. I'm pretty sure there must be a pension fund saying that goes like, nobody's ever been fired for buying American Water stock. But American Water and all its peers have a problem. They're leveraging a crumbling infrastructure. Their treatment plants are probably of the highest standard, but they are built on the extremes of a network that's decaying study after study. So at some point, they will need to bury a lot of capex in the ground if they want to simply stay in business. And even if they do, they will hardly be able to serve industrials with reused water unless they are in their direct neighborhoods or they invest some more capex to bury a second network and pump water back to those heavy users.
What are you trying to say?
Well, in the century of IoT and process automation, a Utility 2.0 company like Cambrian may be a better version of American Water. But before you call me an absolute mad lad, I need to caveat that statement by asking, what led to Cambrian's bizarre exit? Because if you're running a new generation American Water built on the best MIT and NASA tech there is, that finally enables to end the absurd paradigm in which we're using energy to destroy energy while calling it wastewater treatment, why would you ever want to exit from that?
We really don't have any more time for fairy tales.
And that's the problem. These fairy tales take time and money. As brilliant as the Water Energy Purchase Agreement is, it's not that new in the water sector. Some call it Water as a Service, some call it Producing Over the Fence, some go for fancy acronyms like DBFOM or PPP when it's infrastructure, but all have one problem in common: the economics need time to materialize. You have to bury your capex up front, and quite a lot of it, to eventually reap the benefits down the line. But even reaping those benefits is a bit harder in water than in other endeavors, because water doesn't fully follow market rules. If it were, we wouldn't have stupidly low water rates when water is in tension in almost every place on Earth. Go insult me in the comments, but I'm sorry, water is too cheap, and as a result, water-positive approaches like Cambrian's take are harder to finance, which is a lose-lose in the long run. So that's Cambrian's first problem. Their approach is capital intensive, and even though they announced a $30 million fund in 2015, which I, by the way, could not find in the online trackers, and later raised $18 million of project finance from Springline Capital, they still needed cash to make cash. Then the second problem is that Cambrian is US-based.
Why do you hate America?
I really don't, but the E in WEPA stands for energy, and more precisely an about 80% pure methane. And if you recall my video on Energe's Rialto bankruptcy, natural gas is a relatively cheap commodity in the US, currently trading at $2.24 per million British thermal units.
What's this thing with all these numbers?
I had no clue either what a British thermal unit is, so I googled it, and it is the quantity of heat required to raise the temperature of 1 pound of liquid water from 39 to 40 degrees Fahrenheit. Great! I'm even more confused now, so let me convert that to what I understand. Natural gas in the US trades at $7.72 per megawatt hour.
Now I understand.
Right now in Europe, natural gas trades at $25.43 for that same megawatt hour, so roughly 3.3 times more. Nice shirt I had in that one, right? Well, the gap widened even a bit more since then, as today you'd paid $5.12 per megawatt hour in the US and $29.2 per megawatt hour in Europe, so almost 6 times more. As a result, if you're selling gas like Cambrian at equal or below market levels, your headroom for margin is much smaller in the US than it would be in Europe, but deploying to Europe would require new investments, which goes back to my previously listed hurdle. And there's one more. With its EcoVolt reactor and a bit less with its membrane bioreactor, Cambrian is just a little bit too much at the edge of water tech. There are not so much companies in their lane, which means that everything becomes expensive, from the puzzle pieces like the membrane within the electrolysis cell, all the way through the type of talents you'll need to build the company, through the marketing efforts to get those long sales cycles going. So to summarize, my very personal gut feeling here is that Cambrian's struggles are contained in this movie's title.
Well, as you'll know, I've always thought that we tried to go a bridge too far.
Which leads me to why this is a bizarre exit. By universal guesstimates after the fundraising in 2019, Cambrian was valued at about $100 million. They then proceeded to acquire Basswood for another $25 million, so considering there was no value destruction in the merger, one would expect the new aggregate to be valorized around $125 million by 2020. That's about the time when I first interviewed Matthew Silver, and by then, so late 2020, they had produced about 1.5 gigawatt-hour of energy through their EcoVolt reactors. 3 years later, they more than tripled that number to reach 5 gigawatt-hour, all while signing with multiple breweries and food and beverage moguls like Anheuser-Busch or Louis Vuitton Moet Hennessy, which would make you believe the company's value grew a bit. I, of course, had no access to their financials, and I've asked Cambrian and Pennybacker for comments, but they didn't reply yet. So I'm left to assume everything I'll be stating from now. But my gut feeling is that they didn't exit for anywhere near the $150 to $200 million you'd expect. The press release doesn't give any figures, it just states that Pennybacker committed to invest $200 million of growth equity for the further development of WEPA projects. So what I believe would have happened here is that the deal isn't a hard sales. There must be some sort of earnout in place. And again, to be clear, these are out of thin air feelings which are only backed by discussions I had with investors and their own out-of-thin-air interpretations. That disclaimer done, what I suspect is that Pennybacker acquired the rights to 100% of Cambrian against the commitment to invest the $200 million mentioned in the press release. Cambrian would use those $200 million to deploy more WEPA projects and more EcoVolt, BioViper and Blue Cycle containers, while previous shareholders, founders and employees would get a cut of the profit that deployed capital will enable over a period of time and probably several years. So that's bizarre in terms of deal structure, or at least unconventional, but it makes about sense. Pennybacker controls its risk, and if Cambrian's thesis is somewhat right, they will get a reward to prove the due diligence correct. But that's also, to me, the bittersweet aspect of that deal. Cambrian is a water tech tier 2 cool kid, not an investor wonder kid like Gradient or Source, but one of these companies on a potentially disruptive path. And the water sector doesn't use disruptive lightly usually, just because that's potentially the worst go-to-market approach in a quite conservative sector. But the aerated sludge wastewater workhorse we milked since 1914 didn't evolve much since, and the perspective of tapping into the 7-to-1 positive energy ratio of wastewater instead is so elegant that one would think it would drive valuations crazy. Except it doesn't, because the devil is in the execution and the market adoption. But that being said, there's also a great positive in that move. It's the profile of the acquirer. Pennybacker is a private equity fund for real estate and infrastructure. And for years now, a section of the investment thesis of early and growth stage investment funds is that private equity will become a strong exit route for water tech. That matters because there are only so many majors to exit to, and IPO is still in its infancy as an exit strategy. So together with new majors building a water arm to serve the expected 5x in the water tech space over the next 10 years, private equity is a main perspective to cash out on an early stage bet and maximize the return on investment over a fund's life cycle. So it's no surprise that many actors in that growth stage playground got excited when Cambrian and Pennybacker closed their deal. A thesis needs confirmation sometimes, and that surely is one. So what's the take home from that story if you're a water entrepreneur first, and then if you're an investor? For water tech founders, what the story of Cambrian shows is that business business model innovation is as important as technological innovation. I hate to say that because I'm an engineer and a water nerd, but cutting-edge innovation can end up being one bridge too far if you let it stand alone, so you'll have to marry it with the right business model, go-to-market, or sometimes the right service. What that story shows as well is that the so-called conservative water industry allowed a company building systems that leverage electricity-breathing bacteria to activate methanogenesis bacteria to strive for 18 years and counting. That the risk-averse infrastructure private equity world felt confident enough with it to give it a go and put $200 million on the back of that confidence. And that at the other end of that chain, players like NASA helped ignite a fire that's still alive. That's inspiring, right? And for investors, if you're fond of Cambrian's business model, well, you might like many other cool players like Cambrian, Axine, or Clarity. And if you're more into the technical marvels of microbial fuel, electrolysis, or desalination cells, well, there are other cool companies pushing these options out there, such as Aquacycle, Aqualia, or Microorganic Technologies. If you'd like to know more about any of those, please leave a comment or reach out to me. I'm always happy to chat, and I have zero skin in that game. And while you're at it, please hit the like button. That's all I ask for the hours of preparation, recording, and editing for all these videos. And then watch this to go deeper into the energy potential of wastewater, aka liquid energy. And I'll see you next time.